Good evening, all. Ira Epstein, and here we are with your SPDR ETF stock market wrap-up. And this wrap-up is for the evening of Tuesday, and we are now on the 13th of June, 2023, 6:50 p.m. or so. And, what are we now? I think 8 days away from summer. Wow. Market's already talking El Nino events that will affect food and transport, anywhere from 3 to 6% in pricing. So be careful. It's a big one that they're looking for this time around, the early predictions on it. So we'll see how good the science is. Now, today we had an important day. We had the CPI just drop down to the last two numbers. Your CPI year over year was 4%, right what the market looked for, and that's down 9/10, nearly a full percentage point from where it was in April. Now, let me explain. That's really good. You're rushing down, and that's what the market wants to see. Countering it is the Fed's favorite part of this index, which is the core CPI, which doesn't include the volatile food and energy. And it's very heavily weighted, by the way, in what? Shelter costs. It year over year was 5.3%, right with what was expected, and it's down 0.2. So it's falling at a much slower rate, no big moves in it, and difficult to break it down. Now you got to ask yourself, if you look at short-term interest rates, they're running in the Fed's numbers around 5.25. That's what they've got their rate at, right? That's what it's at right now. That's right where inflation is. So the two are now neutral, in my opinion. All right, they're right where they have to be. Doesn't mean you're losing or making money. You're right in the zone. Is that reason enough for the Fed to pause? Skip. It's going to be one of those two words from the looks of it. And the marketplace, not me, the market thinks, according to the CME Group's Fed Watch page, it is. And there's like a 93, 94% bet that the market is going to get a skip tomorrow at 1 o'clock. I am still of the camp that these numbers did not do what I wanted them to do. I kept telling you, I wanted it to beat the 0.2 on the core. Prove to me that there's more oomph in the market. Get ideally at 5%. Wasn't there. If it's me in that meeting, and obviously I haven't been invited in, I'm going to tell you, keep going for the 25 points here. Why stop now and then say, well, maybe we'll go in July? Why not nail it and maybe we'll stop after this one, because you're going to get a reading that ideally gets down and shows you that you've got a downside trajectory. Here's where my thinking is failing. They're looking at the headline and going, well, look at how we're beating the heck out of that. We don't want to push the economy into a full-scale recession. Well, let me explain what's going to happen. If you get my newsletter, the word is my newsletter. I've written it for tonight already. Tonight, when you read that newsletter, you're going to see what happens each time the Fed goes into a pause, then into a cut, and how soon the recessions sit behind it. Not dealing with the depth of the recession when it happens. I've also got reports as to when the Fed finally ends cutting, because once you start once, you keep going, and how the market comes back, all right? The time delay can be anywhere from 2 to 3 months to a year. It generally doesn't go beyond a year when the recession kicks in and you see how everything falls off, and I have the graphs with it and so on. It's a great report. I didn't put it together. It's phenomenal, though. And it's something that I want you to look at. So if you haven't got access to my newsletters, you want to, go to our website at iraepstein.com under free offers and sign up for it there. So I'm going to stick with where I was. That if it's me, I think the Fed should go the other 25 points. I am buried in terms of the people that think the opposite and where the bets are going. When you take a look at Ford, let's stay with these, and after this, I might go to Fisker eventually. I'm looking at Fisker and I'm getting interested in what that electric car company is doing, but we'll stay with this for a little bit. Obviously, I'm excited about this for them and GM because they joined the Tesla parade. Now, eventually, it's going to become a pain in the neck if we don't get more charging stations, because when you add Tesla's cars, Ford and GM electric ones, I envision you're going to be waiting in line for a 15-minute, 10-minute charge or whatever. So I think they're going to need more stations that are out there right now. And we need them on highways. I'm petrified to drive an electric car from here to, say, Indianapolis. Where am I going to find if something happens and I need to charge? I know you'll say, oh, you can find them. You can't that easy, not on the highways. Higher lows, higher highs. Okay, still in an uptrend. You had a bullish crossover where the 18 got over the 100. You normally, when that occurs, and we can back off here, let's go to yesterday. This is the market. They were right together. So today you do it and you make the new high right away. All right. So market's done what I think it had to do on that. You're over all these averages, and now this is going to attack very shortly the 200-day average. And you get over the Bollinger Band, then you move to the right-hand side. Classic bull market, not over, trying to get the developed, Bollinger Band. And in the Bollinger Band, when you get 3 days of numbers over the 90 level, which you have, you're a buyer until the red line closes under 79. Now, there's a way to do it. I teach it in my charting course that is called the Enhanced Bollinger Band course. It is a combination of using stochastics as I teach you to use them, this, and an entry point that I show you how to come up with each and every day and what stops you from coming in on that entry point. Does every one of them work? Absolutely not. SOX, for example, SOXX didn't work. I'll show you when you lose the embedded reading what happened. Market's so strong, it said, no, I'm not going to play with that. Schwab's obviously caught in the narrowness of the Bollinger Band. It lost its upside momentum. It went down to the line in the sand, the neutral zone, the 18-day average, and it has the trend down, the bias up. Why is the bias up? Because you're over the 18-day average of closes. My definition of bias is a filter on indicators is when the market's over the 18, I'm looking for buy reasons. I want my indicators to say buy. When it's under it, I'm looking for sell reasons. It's really not any more complicated than that. It's that. And often, if the market's up or down, it'll go back like it did here and like it did here and look for that neutral zone, which is typically that. And from there, the market tries to make a move. In UGA, the gasoline, it's holding where it should have. We talked about it just yesterday. It had gotten under these numbers. I said, maybe it's going to go down here, but as long as you don't violate this number, you're still okay. And today it reinstated the bull trend. So now you got the higher lows, higher highs. If the market holds together here, what happens? If the market can hold together here, and that's going to be the big if for it, then you open the door for the upper Bollinger Band again. Take out yesterday's low, Monday's low, and you throw the pattern out. XLF, embedded reading, still targeting the combination of the 200-day average and the charcoal. The green is the 100 in the upper Bollinger Band. Until the red line closes under 90, the bulls have control of the market. XLI, embedded reading. Again, you're at the objective. You hit the Bollinger Band again. You're getting a bullish crossover. Just about to get it. You'll get it tomorrow. All the market has to do then, on my rule, is make a higher high. That'd be the highest high on the chart, and away you go. NVIDIA, I put this gray line there just to give you an idea. If you take that out, then losing the embedded reading and the idea that you'll get back to the 18-day average did not work. Take that out, and it's just a sign of more and more strength. And as I said, SOX got through that today, and it looks like it's going to re-embed. So it's getting stronger as the market's coming up, unless we get a surprise out of the marketplace or what the Fed chair does, or what he says, or what the dot plots say or do. I would imagine the dot plots are going to be very friendly for the market because we're hearing so many of the Fed members that have come out in the past 30 days saying it is time to pause. And if they're thinking of pause, generally when you go to a pause, you go to a drop afterwards. So I would think the dot plots are going to be friendly. XHB, not embedded yet. Overbought, keeps hitting the upper resistance, but clearly in an uptrend in this. America's firing on every cylinder in the stock market. Rising tide, which is AI, the chips as well, the software lifts everything around it because everybody says, you know, that multiple at 16 doesn't look so bad to me all of a sudden. I'm going to buy some of this. I'm going to buy some of that. And that's what's going on. This is a feeding frenzy. Where it ends is anybody's guess. You don't want to be the last guy at the table. I like when firms say, in this sector, you've already had a big run. Maybe you take some money off the table. I saw UBS saying that in Apple today. And if you're going to deploy it in something that's just getting going, if it's going to stay going. GLD. Now, you would think if the Fed is going to skip, that means interest rates aren't going higher. The US dollar should fall, which it did today. But interest rates went up today. I didn't understand that. If you were to say what was my confusing part of the day, all day, watching 5-year, 10-year, and 30-year bonds add yield all the way through. Should only add yield, in my opinion, if the market believes as strong as it does that the Fed is going to go into the skip phase. Why is it adding yield? Then why is the Fed even bothering with the skip? If the market's raising the rates for them, it doesn't make sense. Something's out of kilter. I'm sure it'll straighten out, but I see it out of kilter. In the silver, coming back to the 18-day average. Silver has been stronger than this market. Copper, why has it gone up? China. And you'll recall over the weekend, if you were watching, I said, China's supposed to do something. Well, they didn't do it over the weekend. They began doing it yesterday and today. They have first taken 1/10 off deposits that they're paying out to people. Now they're doing it in the repo market. They added $280 million into the banking system, which isn't very much money. But they have said they're about to do something to help the property sector, to help the mortgage sector, to help electric vehicle car sales, and to get the consumer spending money again. I don't know what they're coming out with, but when you hear that, you want to own that base metal because that comes alive, and that's what it did. This is where I'm telling you I'm confused. Okay? If the Fed's going to stop raising rates, why is this dropping again? I didn't get it all day long. I get the dollar. If they're going to stop raising rates, and you got the European Union, the ECB is coming out Thursday morning. They're supposed to go up 25 basis points. Japan's supposed to hold steady on Friday. And on the 21st, I think it is, the Bank of England, everything today that they were saying, looks like they're going up 25 points. So as they go up in rates and we're pausing maybe the potential to go down, the dollar should get hurt. As the dollar get hurt, things that are priced in dollars should go up. Should affect gold. Didn't today. And in the euro, I can see this market making its run right here. Where's the first resistance spot? Right here. You got to 99.77. The 100-day average is 78. You're there for all purposes. People took some money off the table, waiting to see what the CPI is going to do. Not CPI, what the FOMC decision is going to be tomorrow. And from there, they'll make a decision. That's how I'm viewing what's going on. Is it going to be an exciting day? Only in the sense that you got to remember this, and I'm the guy that's wrong. All right. And I am. I'm the guy that people are going to say, hey, he stuck with it right to the end. I am. I am not. I have no bets in place that I can get financially hurt on by saying this. But I don't get why the Fed has to go into a skip phase right now. I can see it later. But you need to see more from that core CPI is my argument. They see something I don't, but they're way better economists than I am. It just seems to me you want to nail nail the coffin shut on inflation. Okay. In any case, if you want to learn how to work with the Bollinger Bands, it's so simple. It's a 15-chapter video course. You get the charting software. You get my morning videos so you see how I enhance it for you every day and hammer this home. Just move your cursor to the top here. It'll take you right to that area. You can go to iraepstein.com, and under education, it's there. I'll see you all tomorrow. Remember, I have the PPI report in the morning, but I'm not convinced it's going to have much meaning one way or the other. Take care.